Hey traders, welcome to our Yes, the Market is Closed, but we're going to do charts and coffee anyway edition. Happy Monday, gang. Happy February 15th, Monday. Got some coffee going, and yes, I'm going to be taking a look at some charts here in the office. So great to see you all. And so I guess the first thing is, Rog, what do you do on a Monday where the markets are closed? Now, remember, not all the markets are closed. Yes, futures are open for, I believe, the half day, but I won't be really in any way trading them actively. However, I do have exposure to some futures contracts, so I'll see what it is that they're doing and make sure they're working within the levels that I'm comfortable seeing them working within. But again, remember, holidays mean that we're going to see lower volume, lower participation, fewer eyes on the market. So what would I trade on a day like this? Typically, if I have Forex positions, positions are going to be trading pretty much normally in terms of, the larger financial centers for Forex, not in any way are the US. It's actually Europe and the UK. So you've got a fairly viable Forex session going until about noon Eastern. So I'll keep an eye on some of my Forex positions. So great to see everybody. So I'm here anyways on a Monday. I won't be spending as much time as I would on a day where we've got more trading activity. But, I think what's really important is, this is, so, I've got these pads that I'll write, all my, symbols. I've got page after page after page of things that, I'll probably go through about one of these pads a week. I've got all the different symbols that I'm looking at. Oh, can you guys see that? Yeah, I've got the different symbols that I'm looking at, their proximity to earnings, whether or not they're a trend follow, whether or not they're close to proximity for the entry, whether or not I might dial it down to a shorter term time frame for some volume assessment, things like that. So, this is stuff that A, I love to do, right? I feel like a treasure hunter, and B, it's my job, right? So days off are cool, but I know it's so trite. They say, if you love what you do, it's not a job. But going into my 34th, 35th year of doing this, I can tell you when you love it, you just keep doing it. All right. So let's go ahead and first, another thing I want to make sure we know is I think a lot of folks, and I hope it's going to be this way, right? I mean, take a look at what the S&P 500 is doing right now. It's continuing to move higher. So, if there's anything that I'm going to continue to remind everybody is we had a very, so if you look at your trading book right now, and I say this not in any way to shake anyone's confidence, but to impart upon you the wisdom that I was given by my mentor early on. Don't confuse an uptrend with brains, gang. If you have found, when you look back on your trading portfolio, and I know that sounds sort of insulting at first, right? I mean, I took it that way. But if you look at your trading portfolio between, say, the end of April, May, to about September, and it did well, fantastic. You did what you were supposed to do. You followed the trend. You didn't try to pick a top and other such really self-destructive things. And then if you notice between September and October, things maybe got a little tricky. That's okay. The market stopped going straight up. All right, well, let's look at what the market's doing right now. So this goes back to not only don't confuse an uptrend with brains, but this also goes to know the environment that you succeed within. Know the environment that you trade the best. Know the environment where your account grows. So when we transition to what we saw through September, October, and some of November, you realize, see, this is the important part. See, people look at the one side of the coin, which is don't confuse an uptrend with brains. But the other side of the coin is this. Don't beat yourself up when the market changes direction. See, a lot of traders, when they don't accept an uptrend is really, really beneficial when the market turns around, oh man, I'm a terrible trader. I've been doing this all wrong. So see, it works both ways, right? That don't confuse an uptrend with brains is as old as a market is, right? That's just an old saying. And the other part is if the markets go choppy again, you've got to learn when to turn the machine off, if you will. You've got to know that, okay, you're not a bad trader suddenly. The market environment shifted. So I hope that really resonates because it's really important. Right now, the markets are going straight up. We're supposed to be doing pretty well, right? That's normal. And if you're not, ask yourself, are you fighting the market? Are you fighting the overall uptrend? Okay. So just a little pit stop there in some trading psychology. All right. So first question. Hey there, Jordan. All right. First question up is FLWS. So 1-800-Flowers, overall uptrend, double green. It got a little choppy through here just after earnings, which I'm not surprised. I mean, after earnings, we'll oftentimes see volatility. That volatility can shake up a trend, and then it's just a matter of waiting for the dust to settle to see if the market still feels the same way about the stock or whatever it is that it did before. And I'd say largely yes. The thing that I would say is going to be important is this area between about 30.80 and 31.80, 30.80 to 31.80. You got some good volume there. So I'd keep an eye on that area for support. It'll probably be pretty darn important. And so that's what would be on my radar for 1-800-Flowers. And when you see the market compress like this, you're probably going to want to see if we're consolidating a little shorter term and maybe if we're going to be taking out some volume levels, which is what I'm really focused on here. I think a lot of traders make way too much of price levels and not enough at the volume at certain levels. And volume and price highs and lows don't always coordinate. All right. So, hey there, Kim. Oh gosh, Kim, I'm here anyway. So thank you. I appreciate it. Thanks to you guys for showing up. You know, it's just another day to me. It's going to be a little bit of a shortened day, but it's just another day for me to, I've got planned this giant list that I have here. And it's a lot of, almost this entire pad has got symbols or something for me to keep an eye on, whether it be macroeconomically or just, I'm working on on more of my list. So I'll be doing this while I guzzling. Actually, I just signed up to watch some Billions, right? So it's going to be fun, just kind of chilling out in the office for a little bit and play with the puppy a little bit later on. All right, so Beam. So Beam Therapeutics. Oh, let me go back on here. Hey there, Becky. Beam Therapeutics. I like the volume level. Just keep in mind, in terms of the countdown to earnings, you have enough time. I mean, you're outside that 2-week window, which is fine. So the last time we pull back, see this right here? That'll give me a little bit of a pause just to be sure that the market is not going to do that again. Or if you buy in this volume area, just be ready for that. Just sort of calibrate to potential volatility. But overall, yeah, that's a double green, Becky. I like it. I like it a lot. Next up, hey, how are you? What is the futures and ETF equivalent to cattle? There isn't one, my friend. There isn't one. So, and thank you for the question. I am in cattle. This was a trade that we sent out on the future side of things. We had a pullback on live cattle futures, and I am in cattle. Not as largely positioned as I would have liked. The pullback wasn't as deep, but no, we really don't have a liquid alternative to cattle. It's not like corn and beans where we have the SOYB or the CORN ETF. There are some different commodity indices, kind of like the S&P 500, but for commodities, like your CRB, things like that. And they have weighting in the meats, but not focus. So this is where, the fluidity and the fluency in multiple asset classes is pretty important. So no, not that I trade, not that I'm aware of. What do I think of the QS chart for a swing trade? I can't say that it's not interesting because it is trying to break out and it's trying to break out through some volume levels, but it doesn't meet my criteria for a trend follow, although the trend that was up, sold off dramatically, and then it looks like it's trying to move higher again. It's interesting. I don't know that I would consider it a swing. So good time to break down what I look at as a swing. There's a lot of definitions for swing trades. For most people, it's just a certain time they'll give a market to move. I honestly hate that definition. It makes no logical sense whatsoever. I've heard this so many times. It induces the gag reflex in me. So let's get on the same page about swing. You guys know I'll always shoot straight with you guys. Swing typically means a trade that lasts 3 to 5 days. I cannot even begin to tell you how mind-bogglingly ridiculous that is to say that definition, right? So what do we talk about as swings? And I know, Kim, you've been watching a really long time. It's an overall trend follow, taking advantage of the swing in the market as being synonymous with retracement or pullback or bounce, but taking advantage of an overall trend. I'm with you here in that it looks like the overall trend should resume, but this is a tough one for me to want to sink my teeth into, my friend. But I like the volume levels that you've identified, and I like the breakout that looks like it's happening through volume levels. People ask me all the time, Rog, do you ever play breakouts? And my answer is usually it's not my favorite. But if you're going to play breakout, it's got to be associated with a volume level. It's got to be associated with either a price-based volume level, which is more my preference, VWAP, volume profile, V-score, things like that. Or it's got to be on a day where we take out a resistance level, in the case of something like this, with higher than normal volume, which is more of a time-based volume than a price-based volume. They're not the same thing. But if you're going to do something like that, which I can see where your head's at, and I dig the fact that you're looking long on something that looks like it would resume its overall trend higher as it's crossing some cool volume levels, but I can't say that I love it. Although, again, I wanted to at least take a moment to say, hey, a situation like this is tradable. I think those VWAPs and the volume levels are going to be pretty important. So thanks for the question, Kim. And again, gang, don't define swings as something that takes a certain amount of days to move, right? Think about swings more synonymous with the retracements in the market. And I think you're going to find yourself getting into better swing trades than you would if you just say, well, I'm going to be in this for 3 to 5 days, right? And I say that, again, only so that we're all on the same page with what that really means, okay? All right, so next up, good morning, gang. Happy Monday. Yes, what is my outlook on gold? Richard, my outlook on gold is I will have nothing to do with it for a short period of time unless it trades back down into the oversold zone that we've been keeping an eye on, likely this Darvis area. And so, yeah, I have very little interest in gold. And I think it's really important to have a do not watch. We have watch lists, right? How about a do not watch list? Gold, bonds, these are sort of edging towards the do not watch list. There's so many other things that have trends and can move in those swing trade setups and have better follow through, less chop. So I guess to back up, in fairness to anybody looking at gold, I think my first question has to be, well, what's your time horizon, right? Are you talking about a time horizon of months to years? Are you talking about a time horizon of the next few days? Time horizon is probably going to dictate your tolerance for being in chop like this. If someone said, Rog, right here, right now, that candle, you've got to take a position, I would have to say long. Is it near the top of my list? No, not in any way. So I think the overall direction for what I'd like to see on gold is long, and the overall zone that I'd like to do it from is within the zone between those previous lows. So I can grab what in this case would be an oversold buy. But so many things, Rickard, so many things are moving in a way that I think is better structure, bullish structure, higher probability structure, if you want to call it that. And I can't say gold is up there. I hope that makes sense. And thank you so much for asking a question that I think a lot of people have questions about. All right, I have no position or insight into EVRI, Don, but on sort of the cursory look at it, looking at the overall trend, what's not to like? Really good respect for the wave since September. Continued movement higher. I'd like to know a little bit more about some of the exposure that I'd have by way of what EVRI or Every Holdings actually is exposing me to in terms of sector or index exposure. But earnings are on the 9th. Plenty of a window for potential rallies into earnings. We just pulled back into the wave. So that would have been on, as you can see here, the 11th. That's your most recent swing entry. But yeah, what's not to like? I just don't like it up at the highs, right? It's got to pull back. It's got to swing lower, right? So, but interesting looking structure. Absolutely. This is the kind of structure we want to focus on. Yeah, no doubt. No doubt. Peloton, that one was on my list. That one's on my list, mostly for a potential, one, volume test support, and two, as a potential breakout, volume level breakout. So with that being said, it pulled back, it's chopping around. What's interesting about Peloton right now is people are really wondering how likely is it for Peloton to start shipping product outside of the US? Cost prohibitive, realistic, as far as the rate of growth we've seen, I think everyone knows at some point you've got to start thinking a little bit more globally. Peloton's interesting for two reasons. One, it's going to be that continual question for anything that's benefited from work from home or work out from home. There's two different conversations here. Work from home, work out from home. How long will that shift? I won't call it a trend because trend makes it sound a little bit more temporary. I think there's more than just hype behind the demand for this because the behavior of people have changed. So remember, Peloton is I'm less interested in whether or not Peloton could ship more bikes. I'm more interested in whether or not the behavior that has allowed a stock, which would not be anywhere near $150 had we not had work from home and work out from home become the cultural shift. It's really more tethered to that, and I've got to say that the more we start hearing vaccine news, the more we start hearing more regular, I don't know that we're there yet, but the more we start to hear there's more of a sort of a regular behavior, pre-COVID behavior, Peloton's going to suffer with that. This is a stock that ended up being the right company at the right time. I'll tell you straight up, gang, without COVID, this company would be a $20 or $30 stock at best. Behavior changed. So behavior is going to be why Peloton will continue to do what it's doing. So it's hard for me to be as enthusiastic about it now as before, but I sure don't want to short it. Does that make sense, gang? So sometimes you have to ask yourself, why is this thing up here and why is it chopping around right now? And I think a lot of the chop has to do with how much more can they expand. A lot of that optimism is priced in. I don't want to short the stock, but I don't know if it's going to have another run like it did last year, right? There's a lot of stocks that benefited from the behavioral shift. And so work and work out from home, those are two biggies. And when you see work from home stocks, many of them struggle. Work out from home stocks are going to struggle as well. I don't see everyone going back to their CrossFit box tomorrow. I don't see everyone going back to Soul Cycle tomorrow, but you've got to think about some of that when it comes to things like Peloton. What are the purple dots? 55. Yeah, those are the 55. Hey there, Trisha. Yes, those are the 55 propulsion dots. Thank you for asking. Scott, I don't have any thoughts on uranium right now. I haven't looked. My thoughts, I don't even have any, my friend. But thanks for asking. I don't mind looking, but it's probably very difficult for me not to be long metals like that. Metals that are not silver, metals that are not gold. I'm a little bit more of a palladium type watcher, maybe aluminum because of how much I trade Australia, but I've got no read on that, my friend. Cow, how liquid is Cow? How liquid is Cow, this Barclays Bank? That's going to be the question. So thank you for that. So there's a lot of, so if you go Google commodity ETFs, you'll find a list of well over, hundreds and hundreds of ETFs on the sector of commodities. So then the next thing I've got to look at is what kind of volume is in Cow, what kind of participation is in Cow. And let's see here. Let's pull this up. So at 23,000 average volume, 23 to 30,000. So like I said, it's not that they don't exist. We need liquid. But yeah, this is a neat name. If you wanted to buy the underlying, I imagine you could, but that's anemic. That's not going to have a viable option chain. It's not going to be necessarily something I'll be able to engage in. This is where I say, if you want to play some of these good old grocery store commodities, go the futures route. Futures are not that scary. And then oftentimes you'll be able to buy options on the futures. So, but thank you for that. Thank you for that. I appreciate that, David. All right. Next up is, do I swing trade futures? Oh, gosh, yes. Gosh, yeah, absolutely. We have been in a swing trade in the British pound now for 2 weeks. From that level right in there. Corn, right? We got a swing trade in corn, got a swing trade in beans, got a swing trade in, that's where some of these commodities conversations have been coming, my friend. Yes, we did swing trades in crude oil all of summer of 2020. So absolutely. And all that means swing, trend following. Yes, it's going to be an overnight position. So you're going to need initial margin, not the day trading. You're going to need the full initial margin, or you can go one of the options routes to take advantage of that narrative. How much more are oil futures than the others? Professor, if you talk to your broker, they'll give you a list of all the initial margin requirement. I don't find oil as expensive as say the NASDAQ, but it's not as cheap as, say, plain Canadian dollar. When it comes to oil, you might have a better bang for your buck by playing the QM mini, or you might choose to play the options on CL, or you might choose to play the USO ETF. So they all have their different amounts. Yeah, they all have their different amounts. In terms of the way you can get exposed specifically to the oil narrative, you actually have a lot of choices, especially if some of the stocks that are commodity oil sensitive are also on the move. In your OIH, your XLE, your XOP ETFs. Any thoughts on BP? All right, let's take a look at BP. Volume level, oversold. That's what I'd focus on there, my friend. LB looks at a good pullback. Again, pullback is going to be within the context of a good structured, really well-structured trend. This worries me a little bit. I don't know I know what the narrative in the broader markets were. There was those few days of sell-offs in the broader markets, and LB took it kind of on the chin there. But other than that, it's done pretty well in the wave. So this is not enough of a pullback for me. Look at the last few pullbacks. Yeah, I'd want to see it in the wave, but just keep in mind, if we roll over in the equity markets again, look how bad LB took this. So keep that in mind. It's very, very sensitive to the tide going out on the broader indices. Dave, I'm using something that I coded up. So the question is, this is actually not a strict VWAP. This is something else I coded up and I'm playing around with on TradingView. Pine Editor is kind of cool. It's actually one of the easier languages to code in. So I'm playing around with something else here, but it's related to VWAP. Yeah, it's just something I coded. SWKS. Hey, Jim, how are you? I like it. I like the structure. It's just nowhere near a level I can do anything with, but a pullback would be interesting. And in this case, a pullback would be interesting, say between the 13 and 21 exponential. So I like the structure, definitely one to put on, if you're keeping a list, it's definitely one to put on there, but I don't have it at an actionable level. Okay. All right. So gang, we're going to wrap it up here. I'm going to get back to work. So thanks as always for joining me for Charts and Coffee. I appreciate it. Work on those watch lists, but enjoy some time off today here. We still have a shortened week, but still it's going to be a good viable week, I believe. And so get that watch list fine-tuned. If you're in Sector Secrets Mastery, you'll be getting a watch list from me likely by tonight. It won't be quite as huge a watch list as last week, where I'm just going to be focusing in on those particular names that have some proximity. We're going to look at correlated and uncorrelated names. Keep in mind what I talked about the overall movement of the market. Last year was an incredible year. It's actually one of the fastest moving years to the upside. And what's going to happen is if a lot of traders don't know when to not blame themselves and don't know when to give the market credit, they're going to get run over by years that don't behave like 2020. So that's why I warn you guys. I don't ever want to shake your confidence, because remember, on the other side of don't confuse an uptrend with brains is when the uptrend starts to shift, know when to shut it down, know when to shift gears, and don't blame yourself. It's a behavioral change in the market. So as long as you have that balance, you will be fine throughout your trading career. And as long as this market continues to move higher, let's not focus on choppy markets. Let's find those markets with a path of least resistance to the upside. So far, when I look at in the sector secrets, a lot of folks saying, hey, we're having a great February. And I'll say, yeah, the markets are going straight up. So our job is just to try to catch as low risk a ride as possible while the elevator is going up. So anyway, have a great day. I'll see you tomorrow.